Meanwhile, potential trade opening, the Trump administration is issuing an invitation to Chinese officials for another round of trade talks. National Economic Council Director Larry Kudlow commenting on the potential breakthrough yesterday.
There's some discussions and information that we received that the Chinese government, the top of the Chinese government, wished to pursue talks. And so we've, Secretary Mnuchin, who's the team leader with China, has apparently issued an invitation. I always believe in most cases talking is better than not talking, so I regard this as a plus.
And, of course, a survey by the American Chambers of Commerce in China and Shanghai found that 2/3 of American companies in China say they have been hurt by the current trade war. Joining us right now is ETF Trend CEO Tom Lydon. Tom, it's good to see you.
Great seeing you, Maria.
Has this impacted investor sentiment?
Well, it has. Everything's been pro-U.S. People have been moving away from investing overseas, especially emerging markets, areas like China. However, Trump's done a good job as far as working out trade talks in Europe, in Mexico, in Canada. They're making some progress there. But the Holy Grail is China. And with discussions of Hank Paulson, Jamie Dimon maybe getting involved, increased confidence, we can see this move a little bit faster. We're seeing it in the markets. Chinese markets are up again today. And after a 20% correction, that's pretty positive.
So tell us where you're seeing the flows right now. How are people investing?
Yeah, we've seen mostly pro-growth in the U.S., and that's been really, really important. However, factor investing has become more important than pure beta investing, like buying the S&P 500 at a very, very low expense ratio. So what happens now, some of the smart money is starting to shift into areas like value that's been underrated, areas like low volatility, because anticipation of maybe the market returning to normal times of volatility, normal market corrections, people are not wanting to exit the market, but they want to be in areas that maybe aren't as aggressive.
Back on China, you know, it doesn't surprise me that the president has pushed through new NAFTA negotiations, and as you said, doing a good job with Europe. He's resetting that balance. But China's unique. It's the one country that the president believes is not just an economic threat. He believes they're a national security threat, and they use 5 different paths to try to outcompete us unfairly on trade. Doesn't that make it awfully hard to get to a resolution like with these other partners? It
does. It's a lot tougher. However, when it comes to the markets, people look at the headlines and they want to look for positive news. Positive news equates to higher stock prices in those areas. And when you look at areas like China and other emerging markets, that's been the weakest area around the world this year. However, the values are there. You look at PE ratios around 11 versus 18 here in the U.S. There's great value there, and I think a lot of investors, there's a lot of smart money that's coming in where people are saying, you know what? I think there's enough momentum where we're actually going to see some progress. And if we do, these undervalued stocks are going to take off. So we've seen $20 billion go into just a couple emerging market ETFs recently. That's given us some confidence that they're going to work it out.
Would you avoid manufacturers here? Reading into the Beige Book yesterday, going district by district, there was a lot of good news in there. But on prices, tariffs were reported to be contributing to rising input costs, mainly for manufacturers. These are manufacturers here in the United States. Their input costs have been rising more rapidly than selling prices, although they've increased efforts the manufacturers have to pass along cost hikes to customers. That is not good news for, number one, profits in manufacturing businesses, or ultimately the consumers buying those products.
Yeah, and it's an important question because the earnings backdrop has been what's driving this market. So you're seeing 25% profit growth. That's what's behind the stock market rally.
Yes.
Does the profit story get impacted by the tariff issue?
Yeah, so it's a great point. So look to mid-cap and small-cap stocks that aren't as affected by tariffs, don't have as much of their business that's overseas. So there's some growth, Invesco mid-cap growth momentum ETF. PXMG is a great opportunity where it's up 28% so far this year, and there's not as much concern because most of the business is within the U.S., not as much affected by tariffs. So when you're looking at your portfolio, you're concerned about tariffs, you're concerned about trade, and you don't have much allocated to mid-cap, small caps, make sure you diversify in those areas.
All right, so there's really a rotation that you see coming. Tom, thank you.
Thank you.
Tom Lydon joining us there.